Welcome everybody to the Armchair Trader podcast. This morning it's Stuart Fieldhouse and Michael Morton from the Armchair Trader, and today we have Dan Blondal, CEO of Nano One, the specialist battery technology manufacturer, who's come all the way today from snowy Canada to talk to us about the latest breakthroughs in battery technology. We're big fans of this company, needless to say, but we want to take the opportunity today to put some questions to the man himself and give the investors out there a little bit more perspective on what's going on at Nano One. So welcome, Dan.
It's a pleasure to be here. Thank you.
We wanted to really start by asking you a little bit about the actual core technology. I mean, Nano One is if we say it's a battery company, that's a little bit simplistic. What is it that's special about the business, and why do you think it's revolutionary?
So, well, first of all, I'll qualify. Nano One is not a battery company. We make batteries for testing purposes and stuff, but we're designing systems to improve the cathode materials that go into batteries. So we are essentially a technology supplier into the battery field.
So you'd say it's more battery materials?
It is battery materials, yes, but it's where specialty sources of lithium, cobalt, nickel, manganese get combined into the active material that goes into a battery. So we're making composite materials of lithium, cobalt, nickel, manganese, or lithium, iron, and phosphate. And that's actually what eventually goes into the battery.
Right, and basically that the components that you're working with, those go into the battery and they make the battery longer lasting, more energy efficient.
Yes. So the from a value add point of view, what we've done is we've developed a process for combining the raw materials into these cathode materials, and it improves the cost structure by first of all by enabling alternative raw materials. So that lithium comes in various forms, as does cobalt, nickel, and manganese. So we're trying to widen that scope of available materials and thereby simplify the supply chain and drive down costs. We've eliminated a number of steps. There's often a preliminary step where nickel, manganese, and cobalt are combined first before lithium's added in. We do it all at once, so that eliminates. It actually doesn't just eliminate a step; it eliminates a middleman quite often. So quite often it's done by a third party, and then there's a coating step that happens afterwards, specifically with the high performance materials. That's to protect it inside the battery, and that coating is added in with the lithium, nickel, manganese. So we actually eliminate the step as well. So we take 3 steps, combine them into one. That simplifies the process. So there's cost savings there, and then ultimately the material that comes out, which is you've got 4 or 5 powders going in, you've got 1 powder coming out, and that powder is structured differently. It's got the same ingredients. It's still got lithium, nickel, manganese, cobalt, and whatever coating materials you have, but the powders themselves are what we would call nanocrystalline or single crystal. So they're pure crystals. There's no sort of grain. There's no agglomeration and grain boundaries, and that actually leads to a longer lasting battery material. So it protects it from some of the degradation mechanisms in the battery. So one of the goals there is to make a longer lasting battery that lasts many more cycles than currently.
And this is something, if you take something like a mobile phone, for example, like my iPhone, you can see how a battery degrades over time. You
Yes.
keep recharging it, but eventually it becomes less and less efficient, and then you end up spending a lot of money to replace it.
Mm-hmm.
And what you're talking about here is a process that is actually going to make batteries like that a lot more efficient.
Yeah, to last longer. Now, I don't think Apple or Samsung are going to want you to want a 10-year battery in their.
No.
They will purposefully design it to be kind of within that 2-3 year life cycle
Yeah.
of the phone. But when you get into electric vehicle and industrial applications, it's all about the total cost of ownership of that battery. How many cycles can you get out of it, and that defines the amount of energy that's stored and distributed in the battery over its lifetime. Particularly important to the industrial space for like electric buses or grid storage, but it's also very important to the automotive space because that defines the warranty on the battery, and that warranty is really where they start. They need a battery to last so long, and they design it to last that long, and then they'll expand it to deal with range and various other things. But so obviously, if you can make a longer lasting battery, you give the manufacturer more room to play with the same package of battery, and could actually lead to more mileage on the battery as well. simply because they don't have to derate it as much, and they can squeeze more out of a single package.
One of the reasons we love Nano One here at the Armchair Trader is the idea of the environmental impact potentially that you guys can offer. Could you tell us a little bit more about sort of how it would work in the real world?
Well, I think actually we have we've had funding for the last 3 years from Sustainable Development Technology Canada, which is a clean tech investment arm of the Canadian government. And we've just announced earlier this year another $5 million in 3 years worth of investment from them. And that's all vetted on sort of clean tech greenhouse gas emissions. So you have to meet all these kind of these criteria in order to be eligible for the funding. And really what our part of that story to SDTC is that by enabling lithium-ion batteries to be adopted quicker, we can actually accelerate the adoption of electric vehicles in industrial applications. So that has a net impact on greenhouse gas emissions. But ultimately, if we can make the battery materials last longer, then per kilogram or per ton of material, if that material is actually in service longer and is delivering more kilowatt hours over its lifetime, then the net improvement on emissions is much better.
Oh, that's great. Well, what's interesting is some of the partners that you're sort of working with at the moment. Can you tell us a little bit about some of those guys?
So we have 3 partners we're currently working with. The first most notable name is Volkswagen, and with Volkswagen we're working on next generation high energy density materials for automotive applications. And we're working on improving the longevity, as we talked about a little bit earlier, so these sort of coatings and single crystals and various other things. So we're working with them and a number of other undisclosed parties on that front. We also have a partnership with a company called Puli Technology in China, and they are a producer of cathode materials. They produce lithium iron phosphate, they produce lithium cobalt oxide, which is what goes into iPhones and materials like that. But our focus with them is on the lithium iron phosphate, which would be used in batteries for electric buses, for grid storage applications, and even quite possibly for replacement on lead acid batteries. So they have very big ambitions to scale up production, and they came to us and asked us to help them with their next generation of cathode line manufacturing. And so we would insert our technology into their line. And so the object there is to get to a stage where we define the next generation of production using our technology, and we would license the technology to them to use on their production line.
Fantastic.
So that's number 2. And then the third one is a company called Saint-Gobain, which I'm sure most people on this side of the Atlantic are familiar with. Very large glass company, been around for many, many years. They specialize also in ceramics, and we're working with them on the final stage of cathode production, where the cathode powders, once they're all prepared, they get fired in a kiln. And in that kiln, they get brought up to 600, 700, 800 degrees. It depends a little bit on the chemistry you're working with. And we're working on the interactions between the furnace and the furnace materials and the cathode materials to improve the efficiency of firing.
Wow, well, there's 3 fantastic companies that you're speaking to. We talked sort of off air before this that there were some sort of potential other opportunities in the pipeline. Is there anything you could tell us on those?
Well, of course, as a public company, I have to be careful about who we're talking about. We're under NDA with most players, but we have a pipeline of as I was telling you, we had some strategic meetings the other day, and we had 28 names up on the board.
That's fantastic.
Of players, and of course our focus is on the ones that are going to be most meaningful to us. But a good chunk of those are household names, either in the automotive or the chemical space and materials space. These are all companies that people know, and we've been building a reputation, and I think most recently I think the work we're doing on these longer lasting NMC materials, the development work there has attracted a lot of attention. So over the last 3 months, we've been inundated with incoming calls from large automotives and chemical companies.
Well, that was interesting because there was something came out in September about the first million-mile battery in operation.
Yeah. So that actually, funny enough, that came out just after we met with you, Stuart, earlier back in September, And we were literally on the plane home when we saw that news, and we were kind of read through it and said, oh, this is actually really good for us. So I'll tell you what it's about. So Jeff Don is a researcher, a very highly reputable researcher out of Dalhousie University in Canada, and they are currently funded. All of their research is funded by Tesla. So Tesla's one of the major researchers. His research is focused on the electrolytes in the battery material. So what he does is test many different electrolytes and develop electrolytes to improve the efficiency and try to reduce some of the side reactions of the battery. I'm probably not doing it service, so sorry, Jeff. He has a tremendous reputation in the market. And what he did in this particular study over a 3-year period, he took a pre-made battery that had no electrolyte in it and tested a whole bunch of different electrolytes, running the battery at higher voltage and higher energy levels to see how long it would last. And the materials that he chose to put in the battery came out of, if you read the paper, you realize that those materials and those cells were manufactured for him in China, and they used a single, what he called a single crystal cathode material. What that means is the little particles of powder each little particle is one whole sort of crystal, and which means that if you break it open within, all of the atoms are all lined up in the same direction all the way through the particle. And how that differs from the way industry makes them today. Industry will tend to make a sort of a larger, hard, crunchy ball of lithium, nickel, manganese, and cobalt. And if you break it open, there's crystals in it, but they're all faceted in this. So there may be hundreds or thousands of little crystals sort of stuck in there with little grain boundaries between them. And those grain boundaries are where the cathode material fails. So as you crush it onto the foils before you assemble it into the battery, those balls kind of break open. And as you cycle the battery, as you move lithium in and out, the crystals actually swell and contract. And as they swell, because lithium causes the layers to push open a little bit,
right.
And as you pull it out, they shrink. And as you do that, it causes stresses along those grain boundaries, and they crack even further open. Yeah. And that exposes everything inside that particle to side reactions within the battery. When you go to a pure crystalline cathode material, you don't have any of those grain boundaries, so it doesn't break open, and you're able to sort of compress it onto the foils without breaking them open as well, and that leads to a longer lasting battery. If you can apply a coating to the outside, you protect everything from side reactions, and that coating stays intact because the particle stays intact.
Oh, okay.
And so I hope that hopefully that sort of clears it. That's kind of what that's the cathode material that he chose to use in there. And it just so happens that Nano One we'd announced a patent in early August with our nanocrystalline or single crystal particles, and so we have a patent covering the particle and the coating that goes around that particle and the process to make it. And our process is able to do it at a very low cost, and so that's become a very big sort of attraction for us. So that paper, that Tesla paper, basically. There was a big splash in the news about it, and lots of people very interested.
It's pretty significant.
Yeah, and we're seeing certainly very big strategic engagement on the back of that, on the back of our technology as well.
You mentioned patents there, Dan.
Yes.
Obviously, that's an important part of the technology that you actually own the patents. Can you give us a bit more background on the patents you have at the moment, or that you're in the process of applying for?
So we've got 14 or 15 patents right now by last count that are issued in China, Japan, Korea, Taiwan, Canada, the US, soon to be in Europe. Europe just always takes a little bit longer. And those patents cover the process, which is how do we combine the lithium, nickel, manganese, and cobalt together. And so it's the way we combine them. And then it also covers the materials that are made. So we define those materials. So what is this, if you look under a microscope, what does this material look like? So the physical properties of the material. And then it also covers batteries using the materials, using the process made with the materials to make the materials. And that covers the full gamut. That's a very common strategy for patent protection. You not only protect the core process, but you protect it. It's a bit like they call it intellectual property because it is very much like a piece of property. You're buying up little pieces of land and you're protecting all the way around. You're kind of ring fencing your technology with a whole bunch of other bits of technology. So it's a really key part of what we're doing. We probably have another 30 patents in the pipe right now.
Oh, right. Okay.
That are in various stages of pending and being released. So you can expect to see patents kind of continually rolling out of Nano One. We've got enough in the pipe that they'll continue to come.
And you mentioned also the cost factor of battery manufacturing and how the technology could potentially introduce some cost savings. I know that the Congo is a big producer of cobalt. Does the Nano One technology mean that battery manufacturers won't need to be as dependent on higher cobalt prices?
Certainly, if we can make materials longer lasting, we can push the boundaries on thrifting out cobalt. I may have to kind of back up and unpack that for you a little bit. So ideally, we'd all be using lithium nickel oxide batteries, but they're very unstable. So
right.
Nickel doesn't like to be on its own. It's sort of in that crystal structure I described. It wants to break open as you drive the voltage up and down. And cobalt actually helps stabilize it, and that was all developed back in the 90s. And so cobalt is an essential component to any sort of nickel-bearing lithium-ion batteries. However, and actually what happened was that the industry kind of decided, okay, well, let's use equal amounts of nickel, manganese, and cobalt, and that leads to a fairly robust lithium-ion battery. But as you take the cobalt out, the energy density goes up, and the voltage goes up. However, the stability goes down, which means it doesn't last as long. Going back to your iPhone example, instead of lasting 3 years, it lasts a year. So you just don't get as many cycles out of the battery. And so getting rid of the cobalt is difficult to do because it impacts the stability of the battery. If you can make a longer lasting battery, then you can push those boundaries more. So we believe that by making longer lasting coated single crystal cathode materials, we can actually push more towards a low cobalt battery.
Right, and what sort of impact will that have? Will that mean that batteries could become cheaper, or?
Obviously, cobalt can be, depending on the price of cobalt, it's often the most expensive component in the battery. But I think ultimately, when you take that all the way back to the battery pack, it's going to be down in single-digit percentages if you're lowering the cost of the cobalt. But supply of cobalt is a really big risk.
Yeah.
As well, and I think that's the automotive companies that's what they're most worried about. Can I have a secure supply of cobalt? Because I'm going to build a battery manufacturing line based on this chemistry. I'm going to build my whole battery management system, the charging and the cooling and the heating based on a certain chemistry.
Yeah.
And if they're going to commit to that, they got to know that they've got this sort of secure raw materials. So if we can help cut that down, we can help them drive the cost of the whole battery down as well. And so it's not just the cobalt price and the elimination of the cobalt pricing, it's also the impact on the whole battery pack. So by making a more stable material, essentially you can actually simplify battery management systems in the whole works.
Looking forward, we could, you can see a situation where there are going to be more and more electric cars on the road. I mean, that's going to happen. That's certainly going to happen here in Europe. Somewhere like the Congo, which has a large slice of the global cobalt market, would potentially be the Saudi Arabia of the 21st century,
yes,
given that dependence on raw materials. So I can see how a lot of the big car manufacturers are concerned about this. And this is obviously a big worry for them. We've touched on how the technology is going to be potentially rolled out, but can you give us a bit more background, particularly on things like the Volkswagen partnership? Because it seems to me that the electric car industry is going to be heavily reliant on this kind of technology in order to fulfill many of not just the ambitions but just the day-to-day operational requirements that we have to address.
Well, with Volkswagen, what we're working on with them, as I mentioned earlier, is improving the longevity and stability of these high energy density materials, which basically means higher nickel, less cobalt. as you drive out the cobalts, you need to improve stability. So we're working on that with them and a number of other players. There's a lot of work to do, and I would say that's kind of, it's got mid-range sort of goals. The process for making them is largely in place. The ratios of materials we use, the additives we put in, are all being determined now. And so once we have a better idea of what that looks like, then we would move into a more substantive relationship with them and with anyone else, and that would lead to give us a lot more sightlines on the kind of the deployment of that technology. What we're doing in China is much closer to production, because that's we're not tweaking the recipe. We're simply just designing the manufacturing plant. And the idea is that will roll out quite quickly. So we could see something in 2020 there, but that's lithium iron phosphate. That's for it's a different application. On the sort of long range electric vehicle side of things. It's going to be a nickel, manganese, cobalt based material, and so finding ways to make a superior version of that is what we have underway.
When you say about midterm for Volkswagen, have you sort of got any idea on timeframes for that? Are you talking sort of 3 years, 5 years?
Oh,
It's difficult to put a
it's difficult to put a sort of a number on that. Typically these kinds of innovations will roll out in smaller applications like consumer electronics first, and that's where the testing ground is, and then they move into larger and larger batteries and larger brands. Essentially, it's all very sort of brand focused, right? So, so the testing ground usually starts somewhere sort of earlier. I think we're working hard to put one of these strategic companies like Volkswagen or some of our other undisclosed parties, bring them in as a more deeply ingrained partner, and that would be either through sort of contractual arrangements or some kind of an equity investment, and that we're trying to get done very soon. So I think that's a catalyst. You can your listeners should certainly expect us to be working very hard on over the next 6 months.
Right.
In terms of it actually ending up in a battery, these materials, realistically, it's in a development stage right now. It would have to be adopted into a manufacturing line. You're talking probably out a couple of years. Before it really kind of takes hold. Before it actually makes its way into a car. If I said sooner than 3 or 4 years, any of your listeners who understand the car industry would say there's no way, because it takes that kind of time. They have to be comfortable with it, and then they have to plan for it into their next models. So that's certainly a few more years out, but it doesn't mean it doesn't get tested in consumer electronics and other applications first.
And the partnerships you have, it takes something like the Volkswagen partnership. That's obviously not an exclusive one. I mean, you could end up partnering with other car manufacturers, for example.
So we basically have our base technology, our intellectual property, our patents all kind of in place, and they're ours and ours to use however we want. So we have not signed any sort of exclusivity agreements on any of that material. So we are working on a component, a tendril of technology with Volkswagen and other people, and those are unique to those parties. And of course, we have to keep those very confidential. But what we do with other parties is up to us. So
it's not limited at all to.
At this stage, we have no sort of limitations at all in our strategic objectives and who we work with. So. And as a result, we're working very hard with this list of 28 names. To bring on more partners, and so that's another thing that again your listeners can expect to see there'll be more partnership announcements as we push this technology further and further.
China in the short term is an interesting one. What processes do you have in place for scaling up?
So in China, we have 3 objectives we're pursuing with Pulead right now. At the technical level, we are testing out the materials and the processes to make sure they're robust and scalable, and we've largely done that internally at Nano One and at Pulead. So we're actually very comfortable with the preparation stage where everything gets mixed in our reactor, and we're very comfortable with the firing stage where everything's fired in the furnace. And we've that's mostly de-risked. And then we're looking at supply chain. So where does your iron and your phosphorus and your lithium come from? Lithium's largely taken care of. Actually, Pulit is also a lithium producer, so that that's a relatively simple step to make. And what we've done is we've sourced an alternative type of iron. So iron comes in many forms, of course. So you can have iron phosphates and iron sulfates, iron oxides, and iron. There's many different types. So what we've done is we have found an alternative source of iron that gets rid of the middleman. So what happens in China today is iron sulfate is upgraded to iron phosphate by a middleman. So there's a sort of an intermediate step, and it's just iron and phosphate that comes out. So it's highly purified iron phosphate that will go to a cathode producer who will mix it with lithium and then cook it in the furnace and then coat it with carbon.
Okay.
And that's kind of how the materials are made. I'm simplifying it vastly, but in our process, we take our source of iron and phosphate and lithium and the carbon coating, and it all goes into one bucket essentially, and that's where our proprietary process is. I don't mean to sort of simplify it, but that our process is essentially it's a stirred reactor, and it's the elegance of the chemistry and everything that where the intellectual property is.
Okay.
And that allows us to eliminate this iron phosphate producer, which drives down the cost. So we're aiming to be somewhere between 10 and 20% cost reduction for the production of lithium iron phosphate.
And can you tell us a little bit about what your revenue streams look like at the moment, and how you sort of project? I mean, I know you can't make too many forward-looking statements, but from just the perspective of the profitability of the business, where it is now and where you'd like to see it, perhaps?
Yes. So at this point, we have no revenue. We're definitely a pre-revenue company, and let me start with China, because that's the nearest. It's got the nearest sight lines to revenue and profitability. So if we execute on our goals for the lithium iron phosphate, that market itself is right now sitting at roughly $1 billion, and it's projected to expand to $2 billion. That's just in black powdered lithium iron phosphate.
Big numbers.
So it's a $2 billion market in 2025. We have seen in the past that new manufacturing innovations get rolled through the whole industry. So we believe that whole part of the market is accessible to us. From the savings we are projecting, we think that we could be commanding somewhere between a 3 to 5% royalty. So 3 to 5% royalty on $2 billion is $60 to $100 million of revenue a year if we access the whole market. Of course, we can't.
It's a lot of money for
it's a lot of money.
Relatively small business.
Yeah, and we're not it's a licensing model in that case. Our cost to run that is relatively low. Right now, we burn approximately $4 million a year. It's very, very modest amount of cash going out the door.
Yeah.
And if and we'll probably be up to 5 or 6 million over the next couple of years. But really, it doesn't get much bigger than that, because we have a pilot plant already built and largely paid for.
Yeah.
There's a little bit of expansion, and there's always going to be tweaking there and equipment. We need a bigger lab. There's a few things like that. But by and large, our operating costs are pretty fixed. And as we take on more partners and more license deals, really we have very, very sort of high margins.
That's the opportunity.
Yeah, that's the opportunity, and then NMC. So these NMC materials that's a $20 billion market in 2025.
Right.
So it's 10 times the size of LFP, and I would say that's a much more competitive market. But if we can bring transformative materials like these longer lasting materials, that just changes the game completely. All of a sudden, people are going to have to use there's going to be different raw materials going in, so nickel, manganese, cobalt, and even lithium will come in different forms using our process, and that's quite disruptive. That'll help drive down costs, and if it makes it a longer lasting material, and if you're getting 2-3 times more cycles out of the battery, all of a sudden your dollars per kilowatt hour in terms of the calendar life goes way down. And that transformation, we believe, can lead to a fairly healthy healthy market share for Nano One and our technology. So again, we could be looking at hundreds of millions of dollars in revenue over the next few years as it gets adopted.
And this is something, I just wanted to emphasize this to our listeners. It's not, some of them will probably still be sitting there thinking, but, Dan, can you meet that kind of scale? But really, you're really the technology.
Yes.
You're not it's not like you're going to have to go out and set up new factories in Canada or things like that. Your partners are the ones who have the scalability and the manufacturing capability.
Absolutely. So we're not looking to be a cathode powder manufacturer. I mean, we may at times go into a joint venture, and there are some considerations there. But in the joint venture, we would be the technology provider, and we wouldn't be, in all likelihood, we're not going to be the supply chain management guys, and we're not going to be the manufacturer, and we're not going to be the sales team for the materials. That's largely going to be owned by whoever is the manufacturer. We are a technology supplier into that. So in that sense, it's imminently scalable. From a business point of view, we have to prove scale of the technology in a manufacturing platform. So we're right now, for instance, in China, we've got by the end of this year, we should actually have what we call our level 2 engineering plans in place, which means you've got everything spec'd out except where you're going to put it. So when you put it somewhere, then you have to meet regulatory and environmental regulation. It's very, very site specific. So then there's some changes that usually have to happen at that point. So we've moved the engineering along substantially, and it's more or less kind of ready to go. Building a plant would require us to bring in an engineering firm to do all the detailed engineering work. We're not going to do it. Yeah. And obviously there's some cost that we would bear on that, but so would the other players. But by and large, it should pale in comparison to the royalties. So all of the value that Nano is creating is very, very much done. It's done up front, and once things start to roll, then of course the profitability should speak for itself.
You're a listed company in Canada, aren't you?
Yes, we're listed on the TSX Venture Exchange. NNO is the ticker.
I mean, I know you got financing from the Canadian government itself. Obviously, there are many technology companies out there that are privately financed, say by venture capital or private equity, for example. And it's rarer to see pioneering technology of this kind being available to investors to actually buy shares. What was the rationale behind going with a listing in Canada?
Well, the simple answer is access to capital. I think at the time it made most sense. So what we saw at that time, that as we were building the company up, we saw the private venture capital community was completely backing out of batteries and materials, and so there was really no access there. And we saw, but what we did see in the public markets was an appetite for anything to do with batteries and battery materials. So it made a lot of sense. So that's the simple answer, and I think by and large it's been pretty good for us. We continue to be pretty happy with the results. We've raised privately. We raised $3 million before we took the company through a reverse takeover in 2015, and if you total that with all the other monies we've raised, it's about $15 million. The Canadian government money, which is all non-dilutive, non-repayable, that amounts to another 10. So all told, there's roughly $25 million raised, of which there's still another $5 million to spend from the Canadian government. So we've just begun that process. So.
And if you're a UK or European investor, where would you go to look at investing?
Well, you can. I mean, this is obviously a Canadian company, but it's much easier now than it was, say, 15 years ago for UK and European investors to directly buy North American stocks, including Canadian stocks, just using standard brokerage accounts.
We do have a parallel listing in Frankfurt and the U.S. as well. So the NASDAQ International in the U.S. and the Frankfurt listing as well. So.
Well, thanks a lot, Dan. That's been really interesting, and we'll be looking forward to hearing more about the business as it goes forward.
Great. Well, thank you. I appreciate your time and your interest in Nano One.
You've been listening to the Armchair Trader podcast, Be sure to pop by our website, thearmchairtrader.com, for regular daily updates on trading, investment, and financial markets around the world.